Hi, good afternoon. I just finished watching the finance minister give his budget speech for the current year. And while, yes, all of us have been disappointed by the announcement of long-term capital gains tax, but I think more or less we were all half expecting the same. And though that's a slight disappointment from a market investor's perspective, I think one has got to remember that the government has a fiscal math to balance. And I think this was critical from the fact that a lot of income, as you mentioned, about more than 3.5 lakh crores of income is being booked by by equity market investment, listed equity investments, and was going outside the tax bracket. And as a country, I don't think we can afford to have such a large set of income not being taxed. So that being said, I think on this particular tax perspective, to all our investors, I would encourage you not to take any knee-jerk reaction today, because one, the grandfathering concept, which says that up to 31st January, whatever the highest the stock price or the mutual fund NAV will be protected. So only gains over and above that will be taxed. So all your past returns have been protected. So that is good news. So there's no need to rush and sell in a hurry. Second is the 10% taxation. It still gives you a favorable advantage over taxation of other instruments like bank deposits and other private company fixed deposits. So moving away from this, and yes, on the dividend option, there is now a dividend distribution tax on equity, which equates it to the debt side. So yes, so I think mutual fund houses will now come up with a different plan in terms of how they handle the dividends. And just to bear in mind that the dividend reinvestment will also attract a tax. So dividend reinvestment and dividend payout are both one and the same. So I think hold on to that and wait for the asset management companies to come out with a plan on the dividend payout, how they will handle that. So moving away from this one particular point of view and looking at the budget overall, I would give the budget a mark of about 7.5 out of 10. For me, this has been a very well-designed, pragmatic budget, and you can actually call it a developmental populism. Why do I say this? Because what has happened is that populism was necessary, because I think given what happened in the Gujarat election, there was this kind of a scare in terms of would Mr. Modi be able to win back a good majority, so he had to cater to various segments. And I think between him and Mr. Jaitley, they have done a brilliant job of catering to all the constituencies. You take senior citizens, you take women, you take new employments. All of these have been given very good tax swaps to keep them happy, and at the same time the fiscal math, the slippage is not too great. Yes, the original FRBM prediction for next year was 3.3. I think this year's fiscal deficit is history. It's only the projected fiscal deficit that we need to look at, and 3.3 is not unreasonable. So I think from an FII, foreign rating agency perspective, this is in fact not going to alter their views on India, which is good news from a stock market inflow perspective. The other thing is that I think the focus on rural, the focus on infrastructure continues as expected, and the government has found multiple ways to put money in the hands of rural India. And I think this is going to be a boost not only to companies catering to the rural sector across irrigation, rural infra and all of that, but given the increased money in the hands of the rural population, the rural consumption story will also continue to remain strong. So as we had indicated in our outlook prior to the thing, and if you see from a bank's perspective, there are a lot of positives here. Apart from the recapitalization part, what they have done is now they are given a boost to the debt capital markets. What they have said is that I think large borrowers will be now forced by SEBI to raise at least 25% of their borrowing requirements from the capital markets. So this eases the burden on the banking system. So any banking system as put together to a large borrower would be able to lend only 75% of their borrowing needs, 20% necessarily the debt capital. So this eases the burden. So if an account turns into an NPA, the burden on the banks will ease, because the capital markets will absorb part of that. And in order to support this, the government has also said that they will encourage the banks to the investment criteria to include below AA up to A category, A minus or A category borrowers. So I think this is good news from the banking system perspective. But the biggest big bang populist move, which has been done in a very smart way, is what I would love to call it as Modi Care, which is India's equivalent of Obamacare. This huge 5 lakh insurance for so many families in rural India, it's a huge thing. It will win Modi a lot of positive goodwill from the vote bank. And I think end of the day, this budget has to be viewed in two things. One, it has enough impetus to various segments of the economic, rural, infra and employment generation. It has done that by not altering the fiscal math. At the same time, he has done what is called a very well-directed populism into the specific sectors which are the vote banks for the Modi government, and hence I think ultimately the capital markets will recognize the fact that continuance of this Modi BJP government for another 5 years, as the probability of that goes up, the future returns from the growth of the economy and the markets will definitely be on a higher note. On that note, like I said, 7.5 out of 10, a very good budget in the current situation.